Welcome back, and well, tell you something, the Nifty is back up 70 points, not quite at the highest point yet, but it's cut its losses and how, and seeing big moves in individual stocks. IT, of course, is doing well, Reliance is doing well, a couple of other stocks also helping the market. Even ICICI Bank is off the lowest point of the day, that's also helping. But for now, let's cut across to Ashmit in conversation with the Vice Chairman of NITI Ayog. We have Ashmit in conversation with Rajiv Kumar, of course.
Just hours after the budget, now we're joined by none other than Mr. Rajiv Kumar himself to get more clarity on what the big takeaways are as far as this interim budget is concerned. The market appears to be in a bit of a buoyant mood. Let's get a sense from the policy side, from New Delhi, as to what the big takeaways are. Again, as far as the markets are concerned, they're looking at three things essentially. One is the farm package, the second is, of course, the income tax rebate, and the third and the critical number is 3.4%, the fiscal deficit. Are these the key takeaways as far as this interim budget is concerned?
Well, these are, of course, the key takeaways, but I think the most important part about the budget is that it demonstrates unambiguously that this government is not one which will succumb to populism or to fiscal profligacy. I mean, one could have expected, as in 2009 and then 2014, that the finance minister could have made it what you could call an election budget, and got about distributing, sort of funds and doling out, sort of largest everybody, as previous finance ministers have done, but not so in this case. It's a very balanced budget. It has kept the fiscal, balance in place. And as he explained, the finance minister explained that if you just exclude the farmers' package, the fiscal deficit is at 3.1%, which is what the glide path was. But at the same time, this is a milestone budget. A milestone budget because it caps 4 years of sustained reforms, and now lays the basis for a huge rebound in economic activity, which will spur investment as we go forward. And I think that's the key, because now with consumption growing, it's a budget which raises disposable incomes. So that'll spur consumption, and that will then spur capacity expansion and investment. So it's a growth-oriented budget. It's an employment-generating budget, and I think lays a foundation for higher growth going forward.
Right. So the consumption impetus is where perhaps the focus appears to be, at least that's what the market appears to be rejoicing. But coming back to you and looking through the fine print, let's first talk about the farm package. This, of course, the message that was sent out is that it will help 12 crore farmers. The concern here is, does it suffer from inherent biases given that it doesn't cater to tenant farmers? That's the concern here, that is there an inherent bias which would perhaps restrict the coverage that the government could have hoped for or sought?
Yeah, you see, so what would be clarified later, I'm sure, is that does this cover all those who own 2 hectares or less of land, or does it cover also those who cultivate 2 hectares or less of land? And I think the finance minister, when he talked about 12 crore households, probably had the latter in mind. So it will include both. Yes, what is not included are the landless workers in agriculture, but there the Manrega budget has been raised to 60,000 crore.
Okay, well, let's move on though. And before, we thank you, Saurabh. I just wanted your thoughts. The biggest loser today is actually Vedanta. Got nothing to do with budget, of course, down 18%. DHFL is down 18%. Z Entertainment down 6% today. We have seen the collapse in the stock, of course. The market's punishing some of these stocks of late. Any issue of governance and the market doesn't like it. The market perhaps wouldn't have done it in 2017, but this is a different market. But your thoughts on what's happening here?
So look, I mean, governance issues have been a bugbear for the Indian market for a long time. What's interesting is the world over, whenever liquidity tightens, the worms come out of the woodworks. If you look at WorldCom, Enron, they happened when liquidity tightened after 9/11. Satyam happened after the post-Lehman liquidity tightening. So last 6 months, liquidity is tightened. We've had several such episodes. And if the short-term money market stays tight, which I suspect it will for the next 6 months, I think we'll get more of these episodes where both promoters, SPVs run out of money and listed entities themselves run out of money. So the accounting issues, the governance issues are a permanent thing. But when liquidity tightens, the issue comes to the fore. Somebody out there, aggrieved supplier, aggrieved customer, aggrieved staff member blows the whistle, and you get a 60, 70, 80% correction in the stock price. So I'm afraid until we get a better liquidity situation, probably every month we will get a showstopper like this, where a prominent company will see a major correction.
Yes, and that too, we're talking about index companies here, some of them.
But let me ask you this, I mean, governance issues for sure, and I get some of the names that we're discussing here, but what about a stock like Z? I mean, there are those who still believe that maybe this is a great time you get in. Once the dust settles and the new promoter comes in, you have a good business at hand. Would that argument hold?
So I think the business clearly is a business that obviously we are all familiar with. Those of you in the media industry are intimately familiar with. But I think promoter SPVs and the leverage they've taken and the fact that the listed entity shares are collateralized by promoter SPVs is something that will bear upon other companies as well. My reckoning is post-ILFS, most promoter SPVs are finding it very difficult to roll over their CPs. Remember, they too have issued CPs to mutual funds. And as the promoter SPVs struggle to get funded, I think you'll have more such situations where even though the underlying company is healthy, because of the pledging of listed entity shares, the list co's shareholders suffer.
All right, Saurabh, thanks a lot for joining us today. Have a good weekend. That's the view from Saurabh Mukherjee. Let's do the BTSC calls now, and then we'll invite Mr. Tulsen as well. Ashwani, Sudarshan and Mitesh, all with us. Ashwani, your thoughts on trade? Of course, you had that short call running. It would have worked. Now the market's off the lowest point. What's the call now? And about individual stocks, what's the strategy?
See, it's actually looking a bit better now because the decline has stopped at 10,820, which is about 50% of the entire rally, from about 10,600 odd. Now what this shows you is that if this continues, then possibly the odds open up of 10,950 also getting crossed. But we have to wait till that happens. The decline has stopped, and at lower levels some buying is visible. So if 810, 820 is the low of this correction, then that means that market is not willing to go towards the lower end, and maybe in a couple of days, if you can get out on the upside, then there may be new ranges for the market. But having said that, individual stocks, Hero Moto is a buy with a stop of 2750, target of 2830. Canara Bank is a sell with a stop of 246, target of 230. And ICICI Bank is a sell with a stop of 356, target of 340.
Okay, so that is Ashwini's list. Along with Hero Moto, by the way, Maruti also, it's definitely off the highs of the day, but nonetheless, still holding on to gains of about 5% as of now. Sudarshan is also with us. Sudarshan, let's get your trading ideas in. Now that, we've seen this volatility play out, what would the stock bets be?
Yeah, good afternoon again. Well, my sense is that markets are topping out for the short term, and we are looking at much lower levels. This was the view earlier when there was a 3-day relief rally. That relief rally is probably done with. Maybe it will again have some moves on Monday. That's a different issue. But the broad view is that we are looking at lower levels for the Nifty in the month of February, slowly and gradually. That's the larger view for today. So that view supports the buying of puts on any rally and selling into the Nifty. For today, we have buying and selling ideas both. L&T and Kajaria Ceramics are buying opportunities. L&T is showing a certain amount of strength, and Kajaria, where a sharp bear market has come to an end and a new up move is starting. So these are two buy ideas. And Tata Chemicals and Raymonds, both mid caps, are short sells, and probably a lot of mid caps next week will come in the short sell list.
Okay, so Sudarshan's turning into a bit of a bear, looking at a top being formed in the market. Mitesh, let's get your thoughts in. Lots of volatility through the course of the day. What are you doing now on the index as well as stocks?
Volatility, I think, but levels are being respected. 10,980 once again held out, and on the downside also, I think 10,820, and we would have fallen more. I still don't think there's a signal of a range breakout or breakdown on either side. So we traded more of stock-specific buys. Right now, I have a buy. Actually, Havells was a buy. It's moved up slightly, but around 730 would be still a good buy. Keep a stop at 713 for targets of 755. And instead of Tata Communication, I would want to add a DVs to recommendation list. I think if it crosses 1535, that would be a fresh breakout. Buy about that. Keep a stop at 1520. Look for a 1570 kind of a target.
Fair enough. We have now SP Tulsen also joining us from sptulsen.com. Mr. Tulsen, good afternoon. We'll discuss a lot of budget stocks, but honestly, first thoughts on Vedanta? Because this whole issue about corporate governance issue with the, Anil Agarwal group companies, keeps coming back. Down 18% on the stock now. Is it a buying opportunity, or is this a big risk now?
See, Anuj, I think sometimes you have to take a very, very tough call on the group that, there is a say that a wise man learns through the experience of others, whilst a fool learns through the experience of himself. But in case of Vedanta, I'm reluctantly, maybe with deep heart, saying that they take the investors for granted. In fact, they've taken this in the past also on many occasions, and in fact, maybe their financial wisdom or their advisory or their board needs to consider this, that you cannot take the things for granted, where the related party transactions, even if it is seen to be of that has to be explained well, and that is what's seen having not gone well with the Vedanta. And even on the result front, in fact, when I've been analyzing, and if I exclude the other income, firstly the results is not good, and then you have this related party transaction. So this kind of effect is bound to be seen happening here, and that is what is seen to be punishing. But maybe I don't know from how far it will get damaged. But I think that Hindustan Zinc seemed to have bottomed out at 250 because it is standalone, having its own fundamentals. But Vedanta is seen to be a dumping ground. I've always said that whatever you have, the residual things, put it in the Vedanta, whether the aluminium, zinc, cane India, and all sort of things, which may not get liked by the market, and that is what is happening now.
By the way, the SBI stock is down 3.5%. Mr. Tulsian, good afternoon, sir. Numbers, they seem to be okay. Asset quality improving, slippages falling. Is this a function of the market's mood today? How would you look at SBI now?
Surabhi, I'm highly impressed with the numbers of SBI. I'm not seeing any kind of issues in that. And definitely, in fact, on the Bank Nifty, probably because we have seen the Bank Nifty having closed at high end yesterday at around 20,300. So this was expected that probably even if you see this kind of performance from SBI, even if you call it as flattish to mild negative, this kind of performance would have seen. And if you really see the situation, generally, which I always say, that you have the group in the Bank Nifty constituents, three stocks always move in tandem: ICICI Bank, Axis, and SBI. They are broadly called as corporate lenders. If they move up, all three moves up, and if they moves down, all three moves down. And in fact, that's what is happening now. And on the other hand, you have HDFC Bank and Kotak. I'm just talking the Bank Nifty constituents of 12 stocks. If HDFC Bank moves up, Kotak also moves up, and if this goes down, the balancing is done by the other 3 and 2. So my point is that in fact, three stocks which have corrected, probably in Axis Bank, I may see the things seen having peaked out to a level of about 720. You may have the fear of the Suti stake sale. So there we are keeping purely on a fundamental basis. I'm not putting them into that group which I just alluded. But maybe if I exclude this Axis Bank, which seem to have reached its value, in fact, I find a lot of value in ICICI Bank and SBI. Both having seen ICICI Bank having factored in all the negatives of the CBI Justice Shri Krishna report, and SBI having factored in the Q3 numbers. So yes, keeping positive view on this one, and that's the reason, in fact, after seeing all these numbers and the kind of upside potential, we won't be surprised to see this Bank Nifty being seen showing a level of about 27,000 to 27,700 in this series itself. That's in the February series. So we are keeping extremely positive view on Bank Nifty for this series going forward, with positive bias on HDFC Bank, Kotak, SBI, and ICICI Bank.
Okay, all right, Mr. Tulsian, just stay on. Right now, let's just look at a cross-section of other views as well. The government, of course, has sounded off the election bugle with the interim budget, thanks to this bonanza that's been announced for farmers, as well as the salaried class, particularly, of course, the low-income earners.